Good morning students. Today we discuss about 12th accountancy morning video. So in this video we continue the same chapter, that is valuation of goodwill, chapter number 4. And in the previous classes we discussed about the meaning, definition of goodwill, and also the factors determining the valuation of goodwill in the firm. And now in this video we discuss about the classification of goodwill. So goodwill are to be classified into two, that is acquired or purchased goodwill and self-generated goodwill. Acquired or purchased goodwill. Goodwill acquired by making payment in cash or kind is called acquired or purchased goodwill. That is, in a firm, if the goodwill are to be acquired by way of cash or in kind, it is called as a purchased goodwill or acquired goodwill. So when a firm purchases an existing business, the price paid for purchase of such business may exceed the net asset, that is total asset minus liability of the business acquired. The excess of purchase consideration over the value of net asset acquired is treated as acquired goodwill. That is, if any firm wants to purchase another firm, so at the time of purchase of the firm, if the purchase value is one amount and net asset will be valued of the firm, that is in which firm the firm will be purchased. So asset minus liability means net asset. If the purchase value is more than the net asset, purchase value is more than the net asset, so the difference amount is called as a goodwill. That type of goodwill is called as acquired goodwill or purchased goodwill. So the Indian Accounting Standard 10 on accounting for fixed asset states that goodwill must be recorded in the books of accounts only when some consideration in money or money's worth has been paid for it. So the goodwill will be valued on the purchase of the value of the business. Purchase consideration in money or money's worth will be calculated. That amount is called as a goodwill. So therefore acquired goodwill can be recorded in the books of accounts and is shown on the asset side of the balance sheet under fixed asset. So the difference between the purchase value and the net asset will be considered as a goodwill, and that goodwill amount will be recorded in the books of accounts and it should be shown in the asset side of the balance sheet of the new firm. Self-generated goodwill. It is the goodwill which is self-generated by a firm based on the features of the business, such as favorable location, loyal customers, etc. Such self-generated goodwill cannot be recorded in the books of the accounts. So self-generated goodwill means the goodwill of the firm will be valued on the basis of the past experience and some of the features of the business, that is loyal of the customers and favorable condition, favorable location of the business, that should be considered in value of goodwill. That type of goodwill is called as self-generated goodwill, and that goodwill will not be shown in the books of accounts. Method of valuation of goodwill. So there are various methods of valuation of goodwill in the firm, that is average profit method. So under this method, goodwill is calculated as certain years of purchase of average profit of the past few years. So in the case of average profit method, the goodwill is to be valued on the year of purchase, and it can be related to the average profit of the past few years. So average profit into number of year purchase is the formula for finding the goodwill value under average profit method. So here the formula is goodwill is equal to average profit into number of year purchase. So in the case of average profit, we should take the past few years profit, and that amount will be divided by number of years. It will be considered as average profit. Number of year purchase will be determined on the basis of the average period a new business will take in order to bring it to the current state of the existing business. So the new business will be taking out. If the business will be already started, what is the condition of the business? That will be calculated as the number of year purchase, and average profit will be multiply it. The goodwill will arise. So adjusted profit is equal to actual profit. That is past expenses not required in the future, past revenues not likely to be earned in the future, and additional income expected in the future, then additional expenses expected to be paid in the future. These four adjustments should be made in the adjusted profit to arise actual profit. So the average profit may be either simple average method or weighted average method. Average profit will be calculated under two methods, simple average method or weighted average method. So in the case of simple average method, the profit under this method, goodwill is calculated by multiplying the average profit by a certain number of year of purchase. So simple average profit is calculated by adding the adjusted profit of certain number of years by dividing the total number of such years. The average profit will be calculated. The formula is average profit is equal to total profit by number of years. Whether it may be a profit or loss, that year will be included. So in order to more understanding this method, let us see one example sum. The following are the profit of the firm in the past 5 years. That is 2014, the profit is 4,000. 2015, the profit is 3,000. 2016, the profit is 5,000. 17, 4,500, and 18, 3,500. So past 5 years profit is given, and they are asking to find out, calculate the value of goodwill at 3-year purchase of the average profit of 5 years. So first we should find out the average profit. So whenever question will be asked to calculate the goodwill, means don't write the formula for goodwill at the first. First you should find out the related answers. For finding the value of goodwill, what should we need? That is, in order to find out the goodwill, we need average profit and number of year purchase. Number of year purchase in the sum itself they are given, 3-year purchase. So we should find out the average profit. Average profit is equal to total profit by number of years. Total profit means all the 5-year profit should be added and divided by number of year, 5. Suppose if in the profit, if any year loss, means that also should be taken into account. Loss should not be omitted. Suppose in 5-year profit, if there is any 1 year loss, that loss should be subtracted. Add all the 4-year profit, subtract 1 year loss. So totally 5 years, the total profit will arise. 4 profit plus 1 profit will be minus if the loss in which year arise. So add all the profit and divided by 5. 20,000 by 5, the average profit is 4,000. The goodwill formula is average profit into number of year purchase. That is, average profit is 4,000 into number of year purchase is 3 years is given in the sum itself. You can multiply it, the answer will arise. That is 4,000 to 3, 12,000. So likewise, a simple average profit will be easily calculated, and the goodwill also will be calculated. Illustration 2 point of view, the previous illustration 1 same, illustration 2 also, but here out of 5 years 1 year loss is given. Totally here 2015 profit, 16 profit, 17 loss, 18 profit, 4-year profit. Last 4 year information are given. Among 4 years, 1 year 2017 is a loss. They are also asking to find out the value of a goodwill. 5 years purchase is given for the past 4 years profit. So we should find out the average profit first. Total profit by number of years. So in this illustration 2, total profit by number of year purchase is the formula. Past 4 years information are given. Among the past 4 years, 3 year are profit, that is 15, 16 and 18. 3 year are profit, 17 is the loss, 6,000 rupees is the loss. So first you should add all the 3 year profit minus in which year the loss will arise, rupees 6,000 in 2017. So for finding the average profit, you should make a plus for 3 year profit minus loss. While simplifying it, the amount will be 40,000 by 4. So the average profit is 10,000. Goodwill, write the goodwill formula. Average profit in number of year purchase into number of year purchase. Average profit is 10,000. Number of year purchase is 5 in the book itself. In the sum itself, it is given. So 10,000 to 5, 50,000. It is the value of a goodwill. So by way of a simple average method, you can apply the formula to find out the goodwill, that is average profit into number of year purchase. Mostly number of year purchase is given in the sum itself. You should find out only the average profit. So depends upon the information given in the sum, you should find out the average profit. So first of all, don't write the goodwill formula. First you should find out the needed information and then you can write the goodwill formula, substitute the value and find out the answer. Okay, so with that we conclude this video. We can continue the same topic in next video. Thank you.